Are you a public sector or private sector employee, a pensioner, receiving unemployment, receiving a check from the National Insurance Scheme on a monthly basis? A set of changes are on the way which match similar recommendations from the IMF's Fiscal Affairs Department on pension reform. Because on February the 1st, 2025, which is just last week, the government of Barbados borrowed an additional $200 million from the IDB, which was approved by its executive board, to further digitize and transform the national insurance. Therefore, a more digitized NAS will be on the way for 2025 and beyond. This is in obvious alignment with the IMF's work plan and the ideal of rationing public spending on pensions. With 133,000 contributors to the national insurance, 49,000 pensioners, and 46,000 persons aged 65 and above set to be impacted by the changes, it may become a possibility in the near future that NAS checks may be phased out as part of the cashless agenda, which is supported by the IMF program. But what next? How will you receive your NAS benefits if there's no longer a check option? Now, a digital ID, the Trident ID, pinned to your bank account, will likely be the mechanism floated to receive your NAS benefits. Therefore, persons without bank accounts and digital IDs will be left behind. Bankers refer to these persons as the unbanked. However, some temporary solution will be offered to support these persons who they are considered to be the unbanked. Now, the $200 million which was approved by the IDB to the national insurance will focus definitely on digital transformation and the legal parliamentary reforms that are necessary to enact these changes. Without a clear doubt, the changes to the national insurance will give politicians less restrictions and more access to NAS funds to be able to invest them in what they are considered to be riskier assets. As they say, higher the risk, higher the reward. Now, changes are on the way as to how we pay contributions by self-employed individuals. Changes are on the way in the way non-contributory pension is handled by the national insurance. And it should be noted that the IMF is on record saying that non-contributory pension is poorly targeted at poverty alleviation, and therefore changes must occur. They will also introduce a set of measures aimed at tackling the solvency of the national insurance, that is, ensuring that it always has money in it. For example, increasing contribution rates, increasing the retirement age, giving individuals payments in bonds as opposed to cash, which are just a few of the measures that may come throughout 2025 and beyond. So I want to encourage you and ask you, what do you think about the respective changes that are going to come to the national insurance? And what do you think about the $200 million loan set to bring about the digital transformation of the national insurance? And lastly, what do you think about the idea of checks being phased out and the use of a digital ID and the bank account to receive your benefits? I'm Kemar, Stuart. Thank you.